next up we're going to have a discussion. So it's a 20-minute discussion, and it's going to be on the future of fintech. And I'd like us to welcome on stage, we have Christian Von Hammel-Bonten, who's Executive VP of Global Product Strategy from Wirecard. And we also have Liliana Reasor, sorry if I get the name wrong, close, who's a venture capital investor and CEO of Novus, Ordo Capital. Many, many thanks. Welcome.
Hello everyone. So I hope you enjoyed your time so far. This is supposed to be a fireside chat, but I'm missing three key ingredients for a fireside chat, which is a brown leather coach, a glass of red wine, and a fireside. Anyhow, it's warm quite in here, so we take this as the fire. Let me introduce myself a little bit. I'm responsible for product strategy at Wirecard. I don't know who Wirecard knows in here. We are what I would probably call the first fintech company from the first wave. We are now 18 years old. 6 billion values, and we do payments, and we support a lot of fintechs, and this is probably one of the reasons why I'm here on stage to talk about fintech with Liliana.
I am Liliana Reasor, founder and CEO of Novus Capital, a dedicated fintech venture capital company based in Ordo. I have many years of experience in investment banking, corporate finance, and fintech from the US and top tier 1 institutions like JP Morgan, Bank of America Securities, Deutsche Bank, and in London, more of the portfolio analytics and risk analytics groups at Morgan Stanley's MSCI group at Novus Analytics. Great to see so many attendees here. I'm happy to be at this event.
Thank you, Liliana. So maybe let me start with a quite broad question, which is, what is the state of fintech?
Fintech, we have so far a bit more than 1,000 companies in fintech that have raised over $100 billion in capital and with a valuation of about $800 billion. Most of the fintechs are originally in the areas of payments. The most famous payment company obviously is PayPal in the US and Wirecard in Germany and Europe. And also the areas where we have seen a lot of investment in the areas such as lending or marketplace lending, robo-advisory, which caters to consumers. Now, I think those were the areas where we saw the initial investments, but there's many other areas of finance that still need technology to improve processes, and many of those are the processes within financial institutions, so within asset managers, insurance companies, so InsurTech has become really hot, compliance, RegTech, cybersecurity, and so on. And we think that fintech is something that is not going to stop, because the future of finance is fintech. There is no reason why finance is not 100% digital, and that's being driven mainly because of technology. It's so much cheaper for fintechs now to enter the market, utilize the best technology, and deliver a better solution than financial institutions. As well, we have the millennials, which love technology, and the younger generations that will push for finance to become more digital. And of course, the mobile smartphones have penetrated, have a very high ratio of penetration. 60% of the developed markets utilize smartphones. So fintech is one of the hottest sectors within venture capital, just because the potential to disrupt and enhance, transform finance into a more digital system.
You said, I think, one important thing, which is driven or when new technology becomes cheaper to provide financial services. And more or less every single day I read something in the news about a new challenger bank. If I just look into the UK market, some people say we have in the UK roughly about 70 different challenger banks. We have Atom Bank, we have Monzo, Moni, Simple, Starling Bank, and many other loot. Are there already too much? What do you see is the future for all these challenger banks? I'm not quite sure if in the end users will have to bank with 10 different banks just to keep them alive.
That is a very good question, and I didn't get to the target. Obviously, challenger banks were created because there was a need for consumers to have a better digital offering from the banks. So we all know that banks have not done a very good job creating consumer-friendly solutions. But also, the challenger banks is a UK thing. The UK government wants to encourage the creation of banks that can deliver better customer offering, because the largest banks, which somehow are also funded more currently by the government, have not been able to provide this customer solution, this digital solution for the customers. So the challenger banks is also a new concept. Most of them, it's taken them like 3-4 years to get a license. So some of them are just at the beginning of trying to get their customers. So most of them have really not come into full operation. So I think we need to see what happens there. But as a consumer, would you prefer a bank that gives you the best digital offering, or would you prefer a mobile bank that doesn't care much about that? And I think the millennials will definitely, will be the ones driving the change, and the ones that adopt the most challenger banks. Obviously, the older generation is a bit hesitant to move accounts, to try to get out of their existing bank account and move into a better digital offering. So it's still, I think, it's still wait and see. Obviously, the American has taken a different approach to solving the issue with the banks not offering good customer solutions by targeting particular segments where banks make money. So lending, payments, investment, retail investments, and they've created amazing solutions on top of what the bank does. So that's a different approach to the challenger bank. So I think both should work. And the UK also is waiting to see what happens on the PSD2. I think PSD2 might encourage creation of more new fintechs and might help some of these challenger banks take away some of the customers from the existing banks.
Yeah, I have to apologize, I haven't done my job. Is there any challenger bank in Bulgaria? No? Okay. Peer-to-peer finance, okay. But not a traditional challenger bank just offering a digital bank only? No, okay.
Are you familiar with what's a challenger bank?
Too many, okay. Yeah. So, of course, there are also in Germany you see some challenger banks, and in the Netherlands with Bank, and in France as well. I think it's spreading across Europe. Who would be willing to really change his primary bank account to a new challenger bank? Okay, I would say roughly about 10% market share.
Yes, but I read in the Financial Times there's an article where they said Fujitsu did a poll and asked Europeans whether they would change their bank. According to this poll, 30% of Europeans will change banks if they find a bank that offers better digital solution. Obviously, we don't know the accuracy of that poll, but you can research.
But if I see the account switching rate numbers in the UK, also it's more or less imposed by the regulator that banks need to support account switching services. You see hardly people switching their bank account. So, let me say in other words, would you put your money into a challenger bank in the moment?
Yes, so usually, why do you use a bank? You want to put your money and use it conveniently. Now, challenger banks will probably do a very good job helping me use my money conveniently, so my app or whatever. The other thing is you want it to be safe. So if the bank goes bankrupt, my money is still there. So they need to be insured, they need to offer this insurance. So far, all challenger banks also offer the same insurance, so up to £85,000 of your money is protected. So will I put in a challenger bank? Yes. Because it's safe and they offer more convenience. Myself, I will, but I...
Yeah, but it's safe only if one bank breaks. If more or less multiple banks because of the systemic problem in the market, then you're probably only safe with systematic banks. So I still bank with Deutsche Bank. It's struggling, but nevertheless, we will never disappear because it's so big, it's too big to say, as we have seen in the financial crisis. So, you see, I'm very pessimistic with a lot of these challenger banks because I don't know if every one of you probably uses video streaming, you like games, you like entertainment. Is money entertaining? Is it sexy? Emotional? This is why it's just... It can be frustrating. But that's probably the only emotion you get out of money. You see, I'm struggling with that. So, but as an investor, would you invest into new challenger banks?
Okay, so challenger banks require a lot of money at the beginning to get set up because there's a lot of requirements, compliance requirements, IT requirements. So I'm very familiar with the Starling Bank, for example, and they are building everything, all this the latest technology from the ground up. But the first investment they got is around at least 40, 50 million more or less. So venture capital companies don't have enough money to put there. So my fund expected size is 50 million. That would be the entire size of the fund. So they raise money usually from private equity companies. And private equity companies are investing in the challenger banks. So Starling got their money out of a private equity company. And private equity investors, they're very savvy with their money. They are not just going to throw it away and see what happens. So obviously they do see the possibility there.
But if we look long term, and it's not only challenger banks but also fintechs. We have seen just the presentation from TransferWise, and if you look at at least I think they don't disclose financial figures, but in the market everyone says they are not making money, they are not profitable. A lot of challenger banks offer the service for free. So the bet on the investing side is that they finally get bought, like Atom Bank had an investment from BBVA, Simple was bought by BBVA, BBVA bought Ordo. So meaning, is this what investors are looking for, that we take over by a large bank, which realizes I'm too late? Or do you really believe that one bank becomes big enough to be a big bank in a market?
I can't tell the future, but with PSD2, so PSD2 is a new directive that opens up banks so that customers, any customer of a bank can choose a third-party provider for any of the financial services like lending, investments, remittances, payments, and so on. We were discussing that it's possible that the large banks might not, so the large banks are supposed to offer open API to these third-party providers, but these banks may want to try to fight that by offering very bad open APIs, and that gives an opportunity to the challenger banks, because the challenger banks, they will offer the best open APIs, and that may attract consumers to switch to them. And also the regulator plays a place. It's possible that the UK regulator might say, look, we've been supporting these large banks here. After the financial crisis, the government needed to invest in some of these large banks. Let's let these challenger banks take over some of these customers. So it's hard to tell what's going to happen, but I think the UK regulators could help these challenger banks take over some of these customers from the other banks that are currently paying massive amounts of fines due to the credit crisis.
Okay. Yeah, of course, no one knows the future, and we will see probably some challenger banks survive, some old banks die as well. So let's see. Anyhow, it's always interesting. When we look at all the fintechs, and of course you have already mentioned various different areas from lending, robo-advice, and other areas. If we look a little bit deep down, what are the key technologies you see which will more or less change financial services in the future?
Well, currently we see obviously mobile internet has been the one that has enabled all the fintechs within retail banking. Cloud technology, because it allows you to offer the software and store your data anywhere in the internet. I like quite a lot the Internet of Things, particularly for the insurance sector, because with the Internet of Things you can collect data from the consumers. For example, in the automobile, people that are driving their cars, now the automobile companies collect your information, your driving behavior, and transmit that data to insurance companies. So the insurance companies can now price more correctly the premium that they should charge you as a driver of a car. The same is happening with the smart homes. So smart homes and Internet of Things they can collect data of your behavior. Are you locking the door when you leave the home, or are you leaving the stove on? So that kind of data will help the insurance companies that provide home insurance. It will give them better data to price the services, the insurance services towards the consumers. So I like Internet of Things, and I haven't found many applications yet for banking, but I'm sure that as everything becomes connected with the internet, there will be other applications. And then artificial intelligence. So artificial intelligence allows you to, once you've collected massive amounts of data, the computers can detect patterns. And these patterns can help you better understand the behaviors. In the past, you couldn't do this with artificial intelligence, and we've seen some applications into it using artificial intelligence because they've collected data for many years of small businesses, and with this data they've collected, they are using it to predict how people are going to file the insurance, the things of the insurance. So instead of just looking at the rules, by reading the rules of filing a tax report, they look at how people have been filing the reports and what data they put and what taxes they pay, and based on that they can kind of predict what other people are going to do. So artificial intelligence is automation is important. And one of the technologies you quite like is in blockchain, and maybe I'll let you talk about blockchain because that's you.
Yeah, I believe in artificial intelligence as well, but personally, of course, as probably many of you as well, a little bit concerned about all the data being collected, especially about my driving behavior. Let's see, because it relates, of course, also to one topic. You already mentioned PSD2 from a regulatory standpoint. I'm not quite sure if everyone is familiar with PSD2. I love all these abbreviations. Short intro, which is simply PSD2 is a regulation imposed by the European government. PSD2 stands for Payment Service Directive 2. So it's the objective is to more or less to create innovation and more flexibility in the financial services market. And what it does, the key ingredients of PSD2 is banks need to provide APIs. You have seen in the past many companies providing APIs because they wanted to get more or less connected everywhere. If you look at Facebook, which has probably driven this as the first company really in a massive scale. But here now the banks have been forced because they always try to prevent access to the data. PSD2 allows companies to access the data of your bank account. And then of course use artificial intelligence to work with this data. So meaning PSD2 of course will have a huge impact. But of course GDPR, I don't know if you're familiar with GDPR, we have in Europe and also new data protection requirements, which also have a huge impact not only on financial services, but generally on your whole digital market. What are you expecting out of PSD2 and GDPR? What is the impact you see on the market?
Well, positive for fintechs in terms of the fintechs that deal with compliance and RegTech. Obviously, even before PSD2 and GDPR, RegTech compliance, fintechs were important for Europe because Europe versus the US has always been more regulated. Most financial institutions are kind of heavily regulated. But I think it would just bring now the banks, they need to comply. So for them, PSD2 means compliance rather than more businesses for them. And so now they need to hire more people or utilize RegTech and compliance fintechs that can help them reduce costs and deliver better products. So I think it's huge for the RegTech compliance fintechs. But also, PSD2 is good for the new fintechs that can deliver better lending solutions, better retail investment solutions, like global advisory, and more solutions related to payments as well. So I think PSD2 is very positive for fintech and bringing competition and innovation. And GDPR is again compliance. You know, you need to now financial institutions, they are liable for losing your data. There are all these requirements they need to comply with. And so again, compliance and RegTech is also fintechs will benefit from GDPR. Cybersecurity companies as well, because now you need to protect yourself as a bank from losing your data to hackers. And so this is very good for cybersecurity companies.
So meaning, if I more or less take this, what you see is that in the end, existing financial institutions as well as fintechs will in the end more work with each other on the basis of more or less the same data. Some a little bit enforced by the regulation, but also you see a little bit more, of course, also friendly partnerships. Because you see the RegTech, of course, is a technology service simply given to banks. It's not a consumer proposition. So you see collaboration being increasing between fintechs and incumbents?
I think PSD2 is trying to force collaboration, which is good. We still have to see it, right? There is collaboration already. I think large firms like PA, I think that's a very good job. So there is collaboration. I think we just increase certain places where there's less collaboration, but we just have to wait and see. I mean, what's your take on that? Obviously, you come from the German market, and my experience is more in the UK and the US, so it's a different kind of experience.
Yeah, it is, because anyone who's not familiar with the German market, but those type of APIs have been existing in Germany for more than 20 years. My first job was working more or less on basis of this API called very traditional home banking computer interface. You see, home banking is something which happened 20 years ago, but it's not happening, or you don't call it home banking, it's called online banking, mobile banking, but not home banking. So meaning I already use since years one application which gives me an overview about all my accounts. Maybe my depots, credit cards, PayPal, it's all in one application. So it's already existing in Germany. But so far the companies doing this type of service haven't done really much using this data to offer additional services. So they typically just combine the banking experience of multiple accounts into one app. But they don't use the data, for example, for cross-selling insurances, I don't know, for making robo-advice, sell ETFs, or whatever other type of new payment or financial instruments are created in the moment. I see we need to come to an end, more or less. I would like to discuss also blockchain, which of course is a hot topic. But given blockchain, where do you see blockchain? When we look at the Ghana hype cycle, do you see blockchain at the peak of inflation? It's the hype? Or do you already see, I don't know, things coming out of blockchain development where you see real use cases which will, I don't know, conquer the world?
It's hard to tell. So blockchain is also still under research. The technology by itself has some few limitations, like scaling, there's some limitations. But I see interesting applications when it comes to moving money. So I guess originally related, the blockchain developed for Bitcoin was an interesting concept. I see maybe Bitcoin and blockchain all being kind of tweaked so that they can find more applications. So far I haven't seen any tangible applications that the companies are utilizing and not nicely scaling, other than in digital currencies. I think with regards to the large financial institutions, there was R3, which was using the blockchain, and then they, after raising, I don't know, 70 million or so, they came out and said, we don't need the blockchain. And so it just makes you wonder, you know. But I think perhaps for digital currencies and payments, which was the original intention of blockchain, I think that's where some disruption. And you probably have better insight on that because you are in payments.
Yes, in simply speaking, Bitcoin was not made for payments, or at least not for retail payments. Because retail payment means, of course, we all want to dip our card, tap our card, it just needs to be within seconds. With Bitcoin, you don't have these seconds. Right now, if you know it, it typically takes 10 minutes until the transaction gets really confirmed in the Bitcoin network. So, I agree with you. Right now, we have still more or less all the research, development done more or less on the technical layer of Bitcoin or blockchain, and the apps are the use cases. So typically right now I see a lot of techies always working and talking about blockchain, but I don't see more or less the business people talking about apps and services like TransferWise. This is a service. You don't care what the technology below is as a user, it just has to work. And this is where we need to get to with blockchain as well. So I think we need to come to an end. You see, fintech is probably a broad area right now. It's covering a lot of different technologies, business models and companies. And clearly, I think we can say is the future is unknown, but it seems to be bright. So maybe you're at the right conference to make up your thoughts about how you can use more or less all this technology to make financial service better for all of us.
Exactly. Agreed.